Everyone wants to reach financial freedom, but the roads couldn't look more different. Option 1, start your own business. Take full control, unlimited upside, complete risk. Option 2, invest in the stock market. Slow, steady, predictable growth, where your money works harder than you do. So which one truly builds more wealth over time? Let's follow two people with the same income, the same starting amount, and the same dream, but two completely different choices. Meet Lena and Noah. Both are 30 years old, both earn $70,000 per year, and both have $40,000 saved. They want to reach financial independence by 50. Noah chooses to start his own business. Lena chooses to invest her money in the markets. Lena wants something reliable, something she can sustain through all seasons. She takes her $40,000 and builds a balanced portfolio. 60% in VTI, the Vanguard Total Stock Market ETF, giving her exposure to the entire U.S. economy. 30% in VXUS, Vanguard's Total International ETF, for global diversification. 10% in BND, the Bond Market ETF, to stabilize swings. That mix historically returns 7 to 8% a year, with an annual dividend yield of around 2.2%. In her first year, those dividends pay her about $880. She sets an automatic contribution of $800 each month and reinvests her dividends. Lena isn't chasing excitement, she's designing peace. Noah, on the other hand, wants to take control. He uses his $40,000 to launch a small home improvement business. He spends $2,000 on his business license, insurance, and legal setup, $10,000 for tools, $12,000 for a used truck and deposit on a small workspace, $6,000 on branding, website, and online ads. The final $10,000 is his emergency cushion, just in case clients pay late. By the end of year 1, Noah's business makes $120,000 in revenue and barely $10,000 in net profit. Taxes and overhead eat everything. But he's proud. He created something. Lena's portfolio at the same moment has grown to about $52,800. She's earned calmly, without losing sleep. Noah grinds 70 hours a week for his return. Lena spends maybe 2. By year 5, Noah's business is earning $350,000 a year with $65,000 in profit. He reinvests most of it into trucks, marketing, and employees. He owns momentum, but also debt and stress. His net worth looks large on paper, but most of it is locked inside the business.
If he gets sick or stops working, cash stops too. Lena's account quietly rolled to $104,000. Her dividends now pay nearly $4,000 annually. She doesn't notice market swings. She doesn't need to. That's the hidden power of time and compounding. While you live your life, your money keeps working. At year 10, a shift happens. Noah finally lands his breakthrough contract, a local commercial deal. For the first time, his business earns more than $180,000 in pre-tax profit. He hires a manager, takes Sundays off, and feels rich. But one lawsuit, one interest rate spike, or an economic slowdown could destroy the last 10 years overnight. Lena just continues. Her steady contributions and an 8% average return grow her portfolio to around $245,000. Her dividends pay more than $6,000 a year. She doesn't check her account. She lives her life. While Noah is building income, she's building independence. Fast forward to age 50. 20 years have passed. Lena never chased trends, never sold during dips, and never stopped investing $800 a month. Her total contributions add up to about $240,000. Compounded at 8%, her investments are now worth around $887,000. Her dividends yield about 2.5%, roughly $22,000 per year in passive income. She could easily stop working within 5 years if she wanted to. Her time belongs to her. Noah sells his company at 50. 2 decades of 70-hour weeks finally pay off. The sale value comes to about $2.2 million. After taxes and fees, he takes home around $1.5 million in cash. On paper, Noah wins, but he sacrificed 2 decades of rest, health, and family life to get there. His wealth is real, but so are the scars. Lena didn't sell anything. She never had to. Her money quietly turned into an income machine. Noah's money came all at once after 20 years of unpredictable risk. Both became wealthy. The difference is sustainability. Starting a business means building wealth through ownership and control. You face high startup costs, long hours, uncertainty, and high reward potential. Annualized returns can hit 20 to 30% if you succeed, but more than half of small businesses fail before year 5. You're betting on your skill, your health, your time, and your ability to scale. Investing in ETFs is slower, but sure. The barrier is low. You can start with $100 and consistency. Average returns near 8% rarely make headlines, but nearly always work. You're betting not on circumstance, but on capitalism itself. Each path demands a different temperament. If you hunger for risk, responsibility, and pressure, you'll thrive as a business owner. If you crave stability, patience, and long-term freedom, you'll thrive as an investor. Noah chased wealth through creation, through adrenaline. Lena built it through compounding, through patience. She turned money into time. He turned time into money. The best investors use profit to fund peace. The best entrepreneurs use wealth to buy back time. The goal isn't to pick one path forever. It's to understand when to step on to the other. If Noah had siphoned just half of his profits each year into the same ETFs Lena used, he'd now have millions more in liquid assets. If Lena had taken 5% of her portfolio and started a side business in her 40s, she'd double her cash flow in a decade. The real wealth comes from combining the discipline of investing with the creativity of entrepreneurship. Both roads cross at the same destination: ownership. The business owner owns the process. The investor owns the world's productivity. What separates them is time horizon, stress tolerance, and peace of mind. When you look at the numbers, Lena's 8% returns seem slow, but they never stop working. Noah's 30% years look incredible, but one bad year can erase 5 good ones. The market rewards patience. Business rewards action. To win, you must know which game you're built to play. Wealth isn't a race, it's a relationship with time, with risk, with yourself. Noah reached money, Lena reached freedom. What good is wealth if you have no time left to spend it? The smartest move might not be chasing the highest return, but choosing the path you can live with at night. If risk keeps you awake, buy ETFs. If routine makes you restless, build something of your own. But choose with humility, because the market and the marketplace both punish arrogance in the same way, by taking your money and your peace. In the end, Noah built income that depended on him. Lena built freedom that didn't. Both found wealth, but one found it quietly, while the other fought for every dollar. Money grows either way, but lasting wealth grows only when you have the time to enjoy it. This is NetPlus, where money stops being a mystery and becomes a language you finally understand. Hit subscribe for more deep dive lessons that actually stick.